The process of valuing a business is a general method of determining a company's economic value. In addition to determining the sales value of a business valuations can also be used to establish partner ownership, calculate taxes, and even determine fair value during divorce proceedings. An objective assessment of the value of a business is often sought from professional business evaluators. The fair value of a business can be determined for a number of reasons, such as when determining the sales price, determining partner ownership, calculating taxes, or determining whether a business should be sold. The market cap of a company, earnings multipliers, and book value, among other factors, can be used to calculate its value. A basic guide to business valuation. A common topic of discussion in corporate finance is business valuation. Companies typically conduct business valuations when they are considering selling some or all of their operations, merging with other companies, or acquiring one. Using objective measures and evaluating all aspects of the business, a valuation determines a business current value. Among the factors considered in business valuation are the management, capital structure, future earnings forecasts, and market value of the assets of the company. Depending on the valuator, business, and the industry, valuation tools will vary. Comparing similar companies and reviewing financial statements are common methods of valuing a business. Tax reporting requires valuation as well. An IRS-mandated valuation of a business is based on its fair market value. A company's share may be taxed if they are sold, purchased, or gifted, depending on their valuation. It is both an art and a science to estimate the fair value of a business. There are several formal models that can be used, but selecting the right one and the appropriate inputs can be somewhat objective. Hello guys, welcome to my channel. Various methods can be used to determine a company's value. In today's video, the following section, we will talk about several of these methods. Number 1.
Capitalization of the market. The simplest method of valuing a business is to look at its market capitalization. A company's share price is multiplied by its number of outstanding shares to determine its market capitalization. A company B, for example, traded at $79.35 on June 30, 2022, with a total number of shares outstanding of 8.815. It would be valued at $699.47 billion. 2 times revenue method. A business is valued by multiplying a stream of revenues generated over a period of time based on the industry and the economy. Typically, a tech company is valued at 3 times its revenue, while a service company is valued at half of its revenue. 3. Multiplier for earnings. A company's profits are a more reliable indicator of its financial success than TS sales revenue, so the earnings multiplier can be used instead of the times revenue method to determine its real value. By multiplying future profits by the current interest rate, the earnings multiplier compares future profits to cash flow that could have been invested at the same interest rate. This means that current interest rates are adjusted into the current P/E ratio. 4. Method of discounting cash flows. Similar to the earnings multiplier, DCF is a method of valuing businesses. The current market value of the company is determined by adjusting future cash flows to get projected future cash flows. In addition to taking inflation into account to calculate the present value, the discounted cash flow method differs from the profit multiplier method. 5. Book value. According to the balance sheet statement, shareholders' equity represents a company's value. An organization's book value is determined by subtracting its total liabilities from its total assets. 6. Value at liquidation. If a company's assets and liabilities were liquidated and paid off today, its liquidation value would be its net cash flow. This list does not include all business valuation methods used today. In addition to replacement value, breakup value, asset-based valuation, and many others, there are also many other methods of valuation. Getting accredited in business valuation. CPAs who specialize in calculating the value of businesses are granted accreditation in business valuation in the US. To become certified in business valuation, candidates must begin an application process, take an exam, meet minimum education and experience requirements. ABV credential holders also must maintain lifelong learning and work experience standards to maintain the credential. Upon successful completion of the program, applicants receive the ABV designation, which can enhance their job opportunities, professional reputation, and pay.
Okay guys, thanks for watching. That is all for today. Hope you found today's video helpful. We will talk more about business evaluations method in the future videos. If you are interested, please subscribe to my channel so you won't miss them. I will see you soon. Get through this, life is a nuisance.